Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Jeff Kilburg, CEO of KKM Financial. Jeff, it's great to see you as always with a quick market update. And it's been a pretty interesting week. It feels as if we're in this holding pattern.
Jill, it's amazing. Here we are in the middle of January, but it's been pretty fascinating to see the markets continue to move higher. We have a lot of optimism, some hopium, if you will, as we're seeing President-elect Biden come out with a $1.9 trillion stimulus. So that's buoyed the stock market and actually pushed it higher. But right now, as we kick off the earnings season, we saw banks kick off today. Now we're going to see if the rubber really meets the road, Jill.
Yeah, that's a great point. And Jeff, with that in mind, you've made some adjustments to the model portfolios. Tell us about the portfolios and some of the adjustments that you made that reflect your sector fundamental thinking.
Well, I think it's a really interesting moment in time, and certainly January is a big rebalance month. You're seeing a lot of people bring their positions back into their target allocations, but our Essential 40 portfolio, we like to call the modern day version of the Dow Jones. It's 40 stocks, and once a year we will rebalance it. So we're taking the winners and selling them, but we're also adding and buying our losers. So bringing those 40 stocks back at 2.5%. But what's interesting about the Essential 40, it's the sector tilt you brought up. And we have more of a sector tilt towards industrials. And this is really the rotation trade. We saw a bit of the rotation trade in the month of September where you still saw people book profits in technology, specifically information tech, and come into the industrials. So we think we're positioned well, the Essential 40. We definitely favor industrials in 2021. And we are still going to have exposure to the giant tech. We're not going to walk away from giant tech, but we're bringing it back into a very measured control exposure as we are seeing some volatility as this rotation trade has been verified and solidified with President-elect Biden.
Yeah, and it's interesting. And I think technology, I don't think we would just walk away from it in its entirety 2021. I mean, look at what's been happening with the semis and the electric vehicle space, which has been so
That's
interesting to watch. I mean, that certainly is the wave of the future.
And semiconductors continues to be one of the main sectors that we own in our sector rotation model portfolio powered by Nasdaq Dorsey, right? So I think you're absolutely right. But just the theme that we saw in 2020 of having exposure to the proper sectors, it's going to be very similar and it's going to persist in 2021. You want to have proper exposure, but you also have to be mindful of what exposure you do not have. And we know that energy and the banks were the worst two sectors in 2020. Now, all of a sudden, with interest rates, look at the 10-year note, went above 1.15. All of a sudden, it's put a little bit of life back into the banks, but it will be interesting to see. Next week, we have Bank of America, Goldman Sachs, Morgan Stanley. There's a little bit of disappointment from an investor perspective off of JP Morgan today, but I think the banks are going to continue to have headwinds as I believe the 10-year note is going to be tethered to 1% for the rest of the year in 2021.
All right, Jeff, great to catch up with you as always. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.